Hello, everyone. Good evening. Welcome in. Welcome in. So we'll be starting in a short while. So let me just start sharing my slides. Hang on. Give me a while. Okay. So hope you guys have settled down. So firstly, really just want to appreciate all of you for taking your time out to attend our webinar tonight. So I really value all your time and will do my best to share with you whatever I know with you. Okay. So my name is Alvin, and one of the lead of the advisory team at MoneyOwl, and I'll be your speaker for tonight. So along with me are my team of advisors who are here to also support you on any questions you may have. So if you have any question, just please feel free to post it in the Zoom chat box at the icon below. If you see chat, you can just post any questions you have. And my team of advisors will be ready to be there to reply you for any questions you have. Okay, so if everyone's ready, so let's begin. All right, so usual disclaimer. Okay, so tonight's session is purely for sharing and training. So if you guys require any specific financial advisor, any specific financial advice, I will highly encourage you all to speak with a trusted financial advisor, or if you do not have one at the moment, we are also here to help you. Okay, so to kick off our session tonight, so let us all take a moment to look at this picture over here. Okay, so can I have a sensing in this room here? How many of you here, just like myself, before I joined the industry, also feel that navigating an insurance policy is just like navigating yourself inside a fog, where sometimes it's very hazy and sometimes you just don't know what you're getting into. So I'm not sure whether you all feel the same way. So maybe you can just help me to type why if you feel the same way, yes, why for yes in the chat box. If no, can just type N in the chat box. Okay, yes. Yes, okay, we have quite a few yes. Yeah, so thanks for participating, guys. Yeah, so actually I'm really glad that you all felt the same way as me. So actually that's precisely the purpose of us having this series of webinar. Okay, so the title of this series of webinar is actually called Demystifying Insurance. So whereby we want to really demystify and help you have a clearer picture about a different type of insurance in the market. So we want to go through with you what should be important to you, what should you take note of, how can you get covered adequately, but not overpaying for insurance as well. Because at MoneyOwl, our philosophy is that you should buy as much insurance as you need, but spend as little as possible. Yep. So I just repeat. Okay, so our philosophy is to buy as much insurance as you need, but pay as little as possible. Okay, so tonight in this series, in this installment of the series, our main focus today will be on critical illness insurance plans. All right. So this is the agenda I've prepared for everyone. Okay, so my objective tonight is very simple. By the end of tonight, I just hope that you guys can walk away with so much more knowledge about critical illness insurance than any other individual out there that is not a financial advisor lah. Okay, so in turn, I just hope that you guys will have more confidence to plan for your own self and your own family's insurance lah. Okay, so number one on the agenda today, I will be sharing with you what exactly is critical illness insurance. When does it actually pays out? And then number two, we also review to you what we think is the main purpose of having a critical illness insurance in your financial plan. Okay, so to me, this second part here is actually the most important part of the webinar, as it gives you a guiding principle on how long you need your insurance for, how much you need to get covered for, and what type of coverage is actually suitable for you. So you really just want to make this very easy for you so that you can walk away knowing what you have and what you need to do next, right? So number three, so currently in the market, you'll realize that there are so many different options for critical illness insurance out there. So in this insurance, I just want to help you make sense of the different options available. And then lastly, I will just wrap up by giving you guys some handles on how to choose which type of policy for yourself. Okay, so let's begin. Okay, so to begin, the $1 million question is, of course, what is critical illness insurance? Again, just like the name suggests, critical illness insurance is basically an insurance that pays you a lump sum of cash in the event of diagnosis of a critical illness. Okay, so then what exactly is critical illness? Okay, so don't be too overwhelmed. Okay, so but basically whenever you talk to a financial advisor, when they talk about critical illness, it's actually this list of 37 critical illness conditions. Okay, so this list of conditions has been standardized in Singapore. So what that means is that no matter which insurance company you go to, you'll still see the same 37 conditions. Okay, so the usual ones that we are familiar with are at the top of the list. So number one, you have like cancer, heart attack, stroke. But a lot of time we just focus on all these familiar ones, but we missed out. I guess because I think like Luke mentioned that there are so many medical jargons, so that we don't actually really understand or appreciate that actually this insurance covers so much more. Okay, so example, this insurance actually cover things like deafness, loss of speech, meaning not being able to speak, also blindness as well, not being able to see, and even those very very chim sounding condition, for example, muscular dystrophy. Okay, so one of our local celeb, Zhou Chuming, he actually suffers from this condition called Kennedy's disease, which is actually a form of muscular dystrophy, and then it's basically a disease which damage and weaken your muscle over time. So you get slowly you lose the use of your muscle over time lah. Okay, and then another famous actor, Michael J. Fox. So if you all remember him, he's the actor in Back to the Future. So actually for him, he suffers from this Parkinson disease, early stage Parkinson disease lah. So Parkinson disease is basically like a brain disorder that causes one to lose the control of your motor skills, example walking or even talking. Okay, so there are also many much more conditions that is covered as well. That is very important that if we do get diagnosed with any of this, we want to have the insurance payout if we do get diagnosed with it. Okay, so maybe let us just okay. I see that people are still streaming in. So maybe let us just now take a short break, as in we will have a poll. Okay, so the poll is basically, okay, you see this list of 37 conditions here. So maybe I just ask the audience, so out of this 37, which one do you guys think that is the most commonly claimed one? Okay, so maybe my colleague will bring up the poll anytime now. Yep. So you guys should be able to see it. So just help me to join in the poll. Let's have fun together. Okay, seems like a lot of people put in cancer, heart attack, and stroke. Okay. Okay, we have quite a lot of cancer options. Okay, we do have some paralysis, kidney failure, heart attack as well. Okay. All right. Thank you, everyone. Okay, so actually, you guys are correct. So actually, the most commonly claimed conditions out of this 37 conditions, even though there is 37 conditions, only one condition makes up more than 65% of claim, which is actually, sorry. Okay, so actually, which is cancer. So cancer alone, just one condition, it makes up more than 65% of claims, which is why when we plan for our clients, we also plan based on the scenario of being diagnosed with cancer. Okay, so does that mean that, hey, then do you need coverage for the other conditions? Can I just buy a plan that covers for cancer? The answer is yes, you can. Of course, you can buy a plan that just covers for cancer. But the problem is that your coverage will have some gaps and leakages. Because unlike going to a la carte restaurant where we can choose which dish we want to eat, sometimes we just cannot choose what illness will hit us. So it's important that we have enough coverage for other conditions as well. Okay, so but for the sake of tonight's webinar, I'll be mainly using cancer as a case study since the probability is the highest. Okay. All right, so let's move on. Okay, so in order to help us all have a sensing of what it is like for a cancer patient, I've went online to read up a bit more on what some of the cancer patients have described their experiences to be. Okay, so as we all might already know, so most of the time when a person is diagnosed with cancer, the doctor will usually advise chemotherapy. And these are some of the comments of what cancer patients have shared when they go through chemotherapy. So the first one that I came across with is this one. Basically, chemo and recovering just become like the primary focus of her life. So because because when you go through chemotherapy, it depends on how your body reacts to it. So sometimes you just become very lethargic that you won't really be able to do anything as well. Okay, so then the second one I came across is basically this one, that after they go through chemotherapy, they'll be just so exhausted that they can hardly drag themselves out of bed. Okay, and the last one I'm sharing is basically this one. It's probably the one that hit me the most as well. Basically, this person thought that, hey, since the chemo started, I really cannot do this. I'd rather die of cancer. This is really worse than dying. Okay, so I think all these different experiences we see online, I think gives us a sensing of how disruptive the side effects of cancer treatments can be. Okay. So then one of the biggest challenge of being diagnosed with a major illness is us not being able to continue in our job, or we might just prefer to take a break from work to really rest and recover. Okay, so if we choose to stop work, we will no longer have income coming in. Okay, though we no longer have the income, we still have to be concerned about putting food on the table, especially if we are the main breadwinner of our family. Okay, so we also have to be concerned about other things like paying for our utility bill, our power bill, telco bills, paying for water, etc., etc. So where can we find money to pay for all these items if let's say we really do have to stop work due to a major illness? Okay, so these are some of the solutions. So number one, of course, we can break our piggy bank and just dip into our savings, but we probably don't want to do that. As that actually means that when let's say we do recover, we will have to save up again. And then number two, what we can consider is also selling off our investments. But that might not be so ideal, especially in times of market correction. So when market comes down, the value of our investment has dropped as well. And we don't want to be stuck in the situation whereby we have to sell off our investments at a loss just to pay for our expenses. Okay, so number three, I believe most of us likely don't want to do this, and even as a last option. So yeah, probably not a good idea. So actually, most of us here would probably agree that the best solution is actually, in fact, having our insurance company pay us a lump sum of money from our insurance policy during such times when we need the money the most. Okay, so with that, let's move on to the purpose of having a critical illness insurance. Okay, before I dive deeper into critical illness insurance, I just want to clear this misconception about critical illness insurance that a lot of my clients tend to have before they came to us. Okay, so to them, they have the misconception that having this insurance is really to pay for our hospitalization bill, for chemotherapy costs, etc., etc. But this is actually incorrect because if all of us we have this plan called the Integrated Shield Plan, which is basically a hospitalization insurance you can pay using MediSave. It not only covers for your hospitalization costs, it not only covers for your surgery costs, it also covers, if you look at the table over here, you see that it also covers things like radiotherapy, chemotherapy, and kidney dialysis as well. So, okay, so if that's why to me, actually, this integrated shield plan is actually one of the most important insurance you must have in Singapore. Okay, if you have not already got this insurance or you're unsure whether you have this or not, I would really encourage you to speak with a trusted advisor to get this looked into. Okay, all right, so with this misconception out of the way, so let us now look at the purpose of a critical illness insurance. Okay, so the primary purpose of critical illness insurance to MoneyOwl is actually income replacement. Okay, so as shared earlier, the main concern of being diagnosed with a major illness is us not being able to work, but we still have to pay for expenses. For example, put food on the table. So when we have a critical illness insurance, the lump sum of cash paid by the insurance will help us to tide us through this difficult and challenging period. Okay, so that's the main primary purpose. Okay, so but for some people, they do have strong conviction for alternative treatments. So alternative treatments, what do I mean by that is basically, when you are desperate, you probably want to try anything. So example, you might just want to take any vitamins, any supplements that can even just boost your chance slightly to help you fight against the illness. Okay, so the secondary purpose is basically to cover for alternative care that is not covered by our integrated shield plan. Okay, all right. Okay, so time to time, I do get some questions from my clients who are parents. They'll ask me, "Hey, Alvin, do I need to buy this critical illness insurance for my kids as well?" Okay, since I mean the purpose is income replacement, right? Okay, so my answer to them is always that you should go back to the purpose of having this insurance in the first place. Okay, so and the purpose of getting insurance for kids is the same as for adults. So the primary purpose of getting this insurance for adults is for income replacement. It's the same for kids as well. Okay, so what do I mean by that? So basically, is it important for us to have that option to stop work, to take some time off to really just spend time to take care of our child if let's say they do get diagnosed with any critical illness? Okay, so if yes, then of course a critical illness insurance for kids can come in handy. I mean, we do have seen cases whereby kids as early as 4-5 years old have claimed for late stage critical illness as well. Okay, so and for secondary purpose, there's actually two purposes lah. Okay, so the first one is just like for adults, the parents might want to use the insurance payout for alternative treatments or hospitalization insurance cannot pay. And in fact, I believe that as parents, most will probably do even more than what they do for themselves to try any other like vitamins, supplements, or whatever thing that can help increase the chance of their kid recovering. Okay, so that's being the first purpose under secondary purpose. All right, the second purpose is that whole life insurance for kids are generally quite affordable. So parents like to look at whole life critical illness insurance, whereby they just need to pay for a limited number of years. Example, I just pay for 15 years or 25 years, and that will actually give my child a whole life coverage. So for kids, it's actually generally quite affordable. Okay, so some parents like the idea that, hey, let's say if there's no claims made for purpose number one, income replacement, or purpose number two, alternative care, at least, hey, I can actually give this policy to my child as a gift so that it covers them for the rest of their life as well. Okay. Okay. So even though after saying all this, right, I would still like to emphasize that this is actually not a top priority. Okay. Otherwise, actually, there's so many risks you can think of that we can get you covered for, and then we end up with the problem of us overbuying insurance. Okay. So you may want to consider this only after you have settled your own financial plan. Meaning to say you have settled your own insurance, you have settled your own accumulation, saving for your kids' education, saving for your own retirement. After all this are settled and you still have surplus, then we can look at this. Because at MoneyOwl, we believe that you should keep the main thing, the main thing. Okay, so you should keep the main thing, the main thing. All right. Okay. So let's move on so let's move on to how long coverage actually do you need for critical illness insurance. Okay, so this actually depends on what's important to you. Okay, as you now know, our recommendation is for you to prioritize income replacement as the main purpose of critical illness insurance. Okay, so and for income replacement, if you think about it, we actually only need to cover the prime working years, okay, till our retirement. Okay, so why is that so? Because if let's say we do get critical illness, I think I saw a question on this just now. Okay, so if we do get critical illness after retirement, okay, by right, if you have done our financial plan right, our accumulated assets at retirement should be able to give us a reliable income stream to pay for your things like your food, telco bill, etc., etc. So anyway, if you already have this asset that gives that income stream, then having income replacement after retirement is actually not that important. Okay, but let's say for you, providing for alternative care is actually important to you, then you probably need the whole of life coverage because since this is a perpetual need for whole of life, okay, even during your retirement years. Okay, then some of my clients actually will ask me hey Alvin, since whole life insurance can cover both income replacement and alternative care, right? Then why not I just buy a whole life plan to cover both needs? Okay, so of course you can do that again, but ultimately I feel that we need to find the right balance. Okay, because let's say today, if you need 400,000 of critical illness coverage, buying a whole life plan, it will set you back about $8,800 every year. Okay. On the other hand, a term plan for the same coverage amount until 65 years old only costs about $1,400 a year. So the difference between this term plan and whole life plan is actually as much as about $7,500 a year. So you can imagine how much you can do with $7,500 every year. You can set aside some to save for your kids' education, for your own retirement, or even now, like you just want to pamper yourself, just want to take some money out to go for a good staycation, you can do that as well. So for me, I'm planning for my honeymoon. So if you need some tips about which place for staycation, can come to me, okay? All right, so now we have covered how long you need the coverage for. Okay, so now let's go into how much coverage you actually need. Okay, how much do you need? To do this, again, let's recap. What is the main purpose of this insurance? Okay, so guys, can you all just help me to type inside the chat box, what is the main purpose of a critical illness insurance? Okay, very good, very good. Okay, you guys are good students. Yeah, so the correct answer, yes, is income replacement. And then for income replacement, if let's say we do get diagnosed with a major illness like a late stage cancer, our recommendation is that you need to be covered for about 2 to 5 years of your income. Because why 2 to 5 years income, right? Is because we believe that this is usually the time frame needed for a person to really rest and be ready to return to the workforce. So let's say if we do get late stage cancer, we want to have an insurance that pays us about 2 to 5 times of our annual income, so that we can really stop work for that 2 to 5 years. Okay, so but just to keep it simple, you can use 4 times of your annual income to calculate how much coverage you need. So just take 4 times of your annual income minus whatever existing insurance you have. That will tell you how much you actually need. Usually until retirement years of about 60, 65 years old. Okay. All right. So you are someone that prefer to have the option to receive the insurance payout earlier, say during the early stages of a critical illness. You can also consider an early critical illness insurance cover, and the recommendation for this is about 6 months to 1 year of your income. Okay, so the coverage duration needed is significantly lower compared to how much you need for a late stage critical illness. Is because the recovery period for early stages of critical illness is usually shorter and it's not so disruptive. All right. So if you're all good, so now we have covered how long you need insurance for and how much insurance you need. So let's go into the last part of the equation. Okay, last part of the equation is basically what type of insurance do you need? Okay, so again, in the market, there's so many different options out there. So I have basically simplify it and boil it down to actually 3 main types of insurance available in the market. Okay, so the first type is a traditional critical illness insurance. So later I'll just spend a bit more time to cover each type of critical illness. The second type is basically an early critical illness insurance, which I mentioned just now, whereby if you prefer to have something that pays you at earlier stages of critical illness, so that's an option as well. And lastly, also what has been quite popular in recent years is basically the multiple claim critical illness insurance. Okay, so now I will walk everyone through each type of policy. So let's begin with the traditional critical illness insurance coverage. Okay, sorry, let me just take a sip of water. Okay, so for this traditional critical illness insurance coverage, this has been around for many years. Okay, so what it does is that it covers the standard list of 37 critical illness conditions I shared with you at the start of my presentation. And these are usually added as a rider to a term plan or whole life plan. Such coverage only pays out once, and upon claiming that one time, the benefits actually terminate. Okay, so to illustrate this, so I've done a timeline to try to illustrate this for you. So let's say imagine today someone at 30 years old decided to buy a term plan with a critical illness rider. Okay, and then at 40 years old, let's say he got diagnosed with a critical illness, for example, major cancer. So what happens next is that the insurance company, upon diagnosis of the critical illness, once you submit the claim, the insurance company will actually pay you the coverage amount that you are covered for critical illness. And then what happens next is that the policy will end there. Okay, so this is for traditional critical illness insurance coverage. So now I'll just move on to the next one, which is basically the early critical illness coverage option. So similar to the traditional critical illness coverage, the benefit ends after the coverage amount is paid out. Okay, so it's also typically added as a rider to a term plan or whole life plan. But in the market, there are standalone plans that just cover for early critical illness. That means you don't need to buy a term plan; you can just buy it on its own. Okay, so the main difference between the traditional critical illness coverage and the early critical illness coverage is basically that the early one, it covers you. It basically pays out during early stages of a critical illness instead of having to wait until late stage critical illness, then you can claim from it. That's the main benefit of this early critical illness or early CI plan. Excuse me. All right, so what I've done is I've extracted, sorry. Okay, so what I've done for you guys is that I've extracted this table from one of the insurance company for illustration purpose. Okay, so let's begin by looking at the top of the table, major cancer. Okay, so basically, let's say for the 37 critical illness conditions that I shared with you guys just now, it's all actually categorized under the late stage column. So when you say like, for example, major cancer, it has to be a major cancer whereby it's characterized by uncontrolled growth of malignant cells that are invading and destroying the normal tissues in your body. Then you can claim from it. Okay. So as opposed to that, let's look at the other end of the spectrum at early stage. Okay, so you can claim under the carcinoma in situ diagnosis. Okay, so what is carcinoma in situ? It's basically whereby the growth of the abnormal cells are found only in places where they first form in your body and not yet spread to the other nearby tissues. So that is actually carcinoma in situ. Okay, so just to elaborate on the intermediate stage for major cancer claim, it is basically again still carcinoma in situ, but the difference is that the doctor has advised for us to go for a radical surgery. So what is a radical surgery? It basically means a surgery to remove certain body parts, like part of our stomach or ovary, for example, to stop the spread of the malignant cells. Okay, so then for heart attack, the late stage is whereby there's a death of heart muscles due to restriction of blood supplying to your bodies. The earlier stages are basically interventions that the doctor can advise you to do. To prevent you from developing to the late stage of a heart attack, for example. All right. Okay, so the last example here is basically stroke. So I think, as we might all know, so in 2016, our DPM Heng Swee Keat actually did suffer from stroke due to brain aneurysm rupture. Okay, so what is this? Is basically that inside the brain there's this thing called the aneurysm, which is basically like a bulge in your artery wall that is caused by weakening of your artery wall. Okay, so this bulge, for sometimes it will just grow bigger and bigger and bigger until one day it will just rupture. So once it rupture, it usually has quite dire consequences. Okay, but thankfully, DPM Heng Swee Keat has a team of medical specialists taking care of him, and he was able to return to work quite soon. Okay, but a lot of us, we might not be so heng to have a team of people taking care of us to make sure that we can go back to work fast. But let's say we're out for 6 months to 1 year, it is important for us to have that insurance that pays out to cover us through that period. Okay, so this is on the early critical illness coverage. So let's move on to the more popular one. Okay, so this is basically the multiple claim critical illness insurance. And just like the name suggests, it basically pays you multiple times through a critical illness condition. Okay, so such plans are usually only available as a term plan, and there are many options out there in the market for such coverage. But for the sake of this webinar, I've again simplified the various options into two main categories or main types. Okay, so the first type is basically one that pays you 100% of the sum assured, regardless which stage you're diagnosed with a critical illness. Okay, so type 2, basically it pays out 100% of the sum assured upon early stage of a critical illness, but pays you a higher amount for a later stage of a critical illness. So don't worry, I'll walk you guys through all of this. Okay, so let's begin with type 1. But before I go into this, I just want to emphasize again, I just want to clarify that whatever I'm sharing here is really hugely simplified. And it's not an exact representation of any product out there. So because for the purpose of this webinar, it'd be very difficult for me to go through each and every product and the features inside. So I've decided to basically simplify all this for us to have an explanation of a flavor of what a multiple claim critical illness, how it works. Okay, so with that out of the way, let's go into the type 1 multiple claim critical illness insurance. Okay, that's quite a mouthful. Okay, so let's assume that today we purchase 100,000 sum assured for this plan. Okay, so what happens is that, let's say if we do get diagnosed with critical illness, it doesn't matter whether is it early stage, intermediate stage, or late stage, the insurance company will just pay us 100% of the sum assured. So in this case, it will only pay us 100,000. Okay, so for example, I was diagnosed with early stage cancer. The insurance company, this type 1 insurance will pay me 100,000. But let's say instead, I was diagnosed with late stage cancer. The insurance company will still only pay me $100,000. Okay, but after claiming the first time $100,000, let's say 1 year has passed, and then now I get diagnosed with another critical illness. Let's say, example, this time I get diagnosed with heart attack. Okay, so I will be able to claim another 100,000 from the insurance company. So this will go on, and usually the insurance company will allow a max claim of between 300% to 500%. So if I bought 100K sum assured, I can claim this 100K up to maximum of 3 times to 5 times, depending on which plan you go for. All right. So now I'll just move on to the type 2. Okay, again, the actual numbers and all that here are simplified for our easy understanding. Okay, so how type 2 works. So assuming 100,000 sum assured again, upon the early or intermediate diagnosis of a critical illness, okay, the insurance company will pay us 100% of the sum assured, just like in type 1, they'll pay us that $100,000. Okay, so but here's the difference. The difference is, let's say this early CI, intermediate CI develops to become a late stage critical illness. Then the insurance company will pay us up to $300,000. Okay, so the focus here is up to 300,000. Okay, so why up to 300,000? It's because usually the insurance company will pay you 300% of the sum assured upon late stage critical illness diagnosis, minus whatever you have claimed previously for early or intermediate stage claim. So, example, you have claimed 100,000 for early stage, and then it developed to be a late stage. I'll be able to claim another 200,000. So total, I will have claimed 300,000. But let's say from the onset, it is already a late stage critical illness, then I'll just be able to claim the full $300,000 from the insurance company. Okay, so usually at this point, most people will want to buy more insurance, but now most of the time they won't be able to buy into any insurance because of their pre-existing condition. The insurance company will likely not accept them. Okay, so but today, let's say if we have this multi-pay critical illness type 2 plan, and let's say if after claiming for late stage critical illness, there was a relapse after a 2 years waiting period, after a 2 years period, let's say for example, there is a relapse or there's a new diagnosis of a major illness, another 150% of the sum assured will be paid out. So in this case, 150,000. Okay, so but there's two criteria. So the criteria number one is that it has to happen only after that 2 years waiting period, and also for the list of conditions covered under the major CI here is actually limited. So usually it's just a more common condition, usually about 3 conditions, like your cancer, your heart attack, and your stroke. Okay, so at MoneyOwl, between type 1 and type 2, we will encourage you to consider the type 2 insurance, especially if you currently do not have an insurance that covers for late stage critical illness. Okay, why is because for the type 2 critical illness, it actually pays you more in the event of late stage critical illness. So actually, that's when we do get, let's say we do get a late stage critical illness, that's actually when we do need the insurance payout the most. Okay. Okay, so just to help us to have an even better picture, a deeper understanding of how each plan works. Okay, so I have came out with this case study scenario. Okay, so whereby a person, let's say his name is Timothy. Okay, so he bought insurance at 30 years old. Okay, then he suffered from different stages of critical illness. So how will the different insurance pay out? Okay, so let's look at this scenario. Okay, so let's say assume at 35 years old. So Timothy now got diagnosed with an early stage critical illness, early stage cancer, for example. Okay, so if he has this traditional CI plan, there won't be any payout because if you remember what I shared with you earlier, the traditional CI usually only covers the late stage of a critical illness. Okay, so but let's say if he has the early CI plan, then you'll pay out $250,000 to him, assuming that he has bought 250,000 sum assured for all 3 plans. Okay, so after he have claimed 250,000 from the early CI plan, the plan will just terminate. Okay, so the multiple claim CI plan, on the other hand, will also pay 250,000 to Timothy, but the plan will continue to cover him. Okay, so let's say at 37 years old, the early stage cancer has now become a late stage cancer. The traditional CI plan will now pay out that 250,000 to Timothy, and then the plan will stop covering him. Okay, so for the early CI plan, of course, it doesn't pay anything because it has terminated already. Okay, and then the multiple claim CI will still continue to pay him $500,000. Okay, so why $500,000? It is basically 300% of the sum assured of 250,000. So if you notice, upon late stage critical illness diagnosis, the total payout up to now has been about 750,000 or 300% of the sum assured. Okay, so whatever numbers I'm showing here is really for illustration purpose. Yeah, so for this coverage amount, it will probably be quite expensive. Okay, so then, so let's say at 39 years old, now suddenly Timothy has a heart attack as well. Okay, so it's a new major CI diagnosis. So the traditional CI, even though it does cover for late stage CI, it doesn't pay out because it has stopped covering already. Same goes for the early CI plan, it stopped covering already. Okay, so but the multiple claim CI at this point of time, it will still pay out 375,000 or 150% of the sum assured to Timothy. Okay, all right, everyone. Okay, so so now we move on to the meat of the discussion. Okay, so which plan is actually suitable for me? Okay, so just let me try to do a quick recap of all 3 plans again. Okay, so usually upon late stage critical illness, all three plans, the traditional CI plan, early CI plan, and the multiple claim CI plan will all pay out. Okay, but for earlier stages of critical illness, the traditional CI actually does not cover that, but both the early CI plan and the multiple claim CI will cover for early or intermediate stage of a critical illness. Okay, so then option to cover for whole life, typically, based on what I observe in the market, the multiple claim CI currently is the only one that doesn't offer whole life coverage. So for a traditional CI and your early CI, there are options to be covered for this for whole of life. Okay, so but for multiple claim critical illness, currently mostly it is available only as a term plan to cover you to a period of time, example 70 years old or 80 years old, for example. Okay. All right. So just basically to lastly, so the multiple claim critical illness plan, it is the only one that allow us to claim multiple times. All right. So I believe most people at this point of time will be curious, okay, how the premiums will look like for each of these different plans. So what I'll do is that I will share the premiums based on a 30-year-old male and a 30-year-old female, and then let's look at this couple, how much the insurance will cost them. Okay, so just remember that. So for this assumption, I've used the assumption that this couple want a $250,000 payout in the event of late stage critical illness. So the early stage critical illness is just a good to have. Okay, so how the premiums will differ will be like this. Okay, so let's say today if I buy a term plan that covers for death as well, and I add on a CI rider, critical illness rider, so the premiums for a 30-year-old male will be about $850 a year. Okay, so for females slightly cheaper, about $770 a year. Okay, but for 250K coverage for early stage critical illness, it will be very, very expensive. For 30-year-old male, it'll be about $2,080 a year, and just slightly more for a female, about $2,090. Okay, so this is the interesting part. Okay, so for this multiple claim CI, I've used type 2 as an illustration because this is what we will encourage you to consider as well. Okay, so again, so just now I was saying that, okay, so the couple want a 250,000 payout in the event of late stage critical illness. So I've basically used 84,000 sum assured, which means that upon early CI, they claim 84,000. Upon late stage, they'll be able to claim 84,000 times 3, which is about 250,000. Okay, so for this premium amount for a 30-year-old male, it will actually just be slightly more compared to for a traditional CI plan. So about $871. Okay, but just take note that for this multiple claim CI, the death coverage is usually quite little as compared to the traditional one. The death coverage amount is usually the same as for the critical illness coverage amount. Okay, so for female, it'll be more expensive. It'll be about $1,081 a year. Okay, so which plan is actually more suitable for you? So in my opinion, for those that are very clear about what they want, for those that really just want the lowest cost to get covered for the most essential things, then probably this term plan will actually give you the highest chance of being covered at the lowest cost. Okay. And then for those that have preference, to stop work earlier, that means like, let's say if I get diagnosed with an earlier stage of a critical illness, early or intermediate stage of a critical illness, I really want to stop work, then the early critical illness plan might be suitable for him or her. Okay, lastly, so if we just want a very cost efficient way to be very comprehensive covered from early stages to late stages, and even after that still being able to claim, then the multiple claim CI plan is actually probably the way to go. All right. So everyone's good still with me? Okay, so I'm actually towards the end of our webinar already. So basically what we have covered what is critical illness insurance. We have covered the purpose of critical illness insurance. We've covered how much insurance you need, how long you need, and which type of insurance is suitable for you. Okay, so what does all this means to you? All right, so now let me try to wrap all this up using this table I've extracted from MOH website. So in this table, it shows us the top 10 causes of death in Singapore. Actually, this was something that's quite interesting for me. Okay, so if you look at it, the usual culprits of cancer, heart attack, stroke are all here. And then for cancer, actually you'll notice that about 29% of the causes of death is actually due to cancer. Okay, so what does this mean? Well, like it or not, we're all going to die someday. So according to statistics, actually more than half of us, we are going to suffer a major illness before we pass away. And that's very scary. it means the chances of us getting diagnosed with it is actually very high. And the illness doesn't care whether you are rich or poor, famous or not, it will strike us. So in fact, just in a span of a few months, we have lost a few really talented actors to cancer. So some of you would have recognized this man, Chadwick Boseman. He was this very iconic Marvel. He played this very iconic Marvel character, Black Panther. So actually, he has been fighting colon cancer for a few years before actually passing away last year. And then closer to Asia, just this year alone, we have lost two veteran Hong Kong actors. One being Liu Kaiji due to stomach cancer, and also Ng Mat Tat due to liver cancer. Okay, so the chances of us getting major illness is actually very high. I don't know when it's going to happen. Is it going to happen now or much later? If it happens much later, let's say during our retirement years, we are not so worried, as the financial impact of it is actually not so big. But if it were to happen during our income producing years, then we'll be more worried, because on one hand, I cannot work anymore. But on the other hand, we still have to put food on the table. Therefore, having income replacement in the event of critical illness is actually very important. So it's important to be sufficiently covered with a suitable CI plan, whichever plan you have, whether be it a traditional CI plan or early critical illness plan or multiple claim critical illness plan. Having one of these plans will take care of that and give you that peace of mind, knowing that one day, let's say if we are down for our family and ourselves, at least we know that the income part has been taken care of. And if you do it the right way, buying the correct critical illness coverage is actually very affordable. So please feel free to speak to one of our advisors if you need any help on this. Okay, so now that you know how much CI coverage you need, how long coverage you need, and what type of coverage is suitable for you, then let's proceed to the last part here. Okay, so today, let's say you do have sufficient coverage, then I'm really happy for you. But let's say today you do not have sufficient coverage and would like to do something about it. Most people would usually speak with an agent. And as much as we know that doing something about financial plan is important, sometimes we just dislike the uncomfortable process of meeting a salesperson, because sometimes I just feel very pressured that we have to buy something. So that's the reason why we have created this website, which is really like a no pressure virtual shop where you can go in, you can find out what you need, you can do some comparison. So what are the plans in the market, and our robot in the website actually even recommend to you which plan that is suitable for you based on what you're looking for. Okay, so and once you're ready, and only when you're ready, you can then speak with one of our advisors. Okay, so these are the advisors that I'm very proud to work with day in, day out. So I really, from the bottom of my heart, I believe that this group of advisors, we are a very, very special breed of advisors. And what makes us stand out is that number one, so our advisors are competent in what they're doing. We are, to begin with, in our hiring process, we are very selective when it comes to hiring advisor. And on top of the usual papers that all MES registered advisors have to take, our company also make it a point that all advisors have to go through this internationally recognized program. It's called CFP, or Comprehensive Financial Planner Program. Okay, so number two, conflict free. What do I mean by that is that basically all the advisors you see here in this picture, they do not draw any commission at all. Instead, they draw a fixed pay from MoneyOwl directly. So what this means is that it removes any potential conflict of interest for you and give you assurance that whatever we recommend is actually based on what we think is the best for you. Okay, so number three is comprehensive. So our advisors are trained to be able to give you the advice that you need, be able to look at your financial plan more comprehensively. Instead of just selling you a product that is flavor of the month, we want to be able to understand your needs. We want to understand what you have at the moment and how we can help you bridge any gaps if you have any. Okay. So if you do decide to implement any insurance with our advisors, I'm also very happy to share with you that actually we do give our clients a 50% basic commission rebate. Okay, so what is this basic? Okay, so if this is your first time hearing about commission rebate, have no idea what it is. Basically, whenever you buy an insurance policy with an agent, the agent will be compensated by the insurance company in the form of commission. Okay, so but as mentioned earlier, MoneyOwl, all our advisors are fully salaried. So whatever agent commission we receive from the insurance company, we will instead rebate 50% of the commission we receive back to our clients in cash after deducting a small admin fees. So what this means is basically actually more savings for you when you do implement your insurance with MoneyOwl. Okay, sounds good. Okay, so actually that's not all. Okay, so just want to thank everyone for staying with us until now. Okay, so for you guys, we have prepared a very special deal for you. Um, okay, so right, sorry. Okay, so exclusive to only webinar participants tonight. So we will actually be giving you, instead of 50%, you'll be able to get 60% commission rebate. Okay, so all you have to do is simply present your webinar registration email to our client advisors. Let them know you have attended our webinar, and then we will actually give you that 60% commission rebate. But just take note that this is a limited time promotion. It's only until end of this month. So if you guys have any question, please feel free to drop us a note or any inquiry in our contact details below here. Okay, so these are our contact details. And before I go, I just want to thank everyone for being such a good audience. And then, okay, so I think there's a question on what's our charges. So at MoneyOwl, actually, we don't charge you to go through your insurance needs, to implement the insurance for you. So basically, our compensation is basically the other 50% that is coming from the insurance company. Okay. All right, so if you guys have any feedbacks or comments of how we can improve tonight's webinar, please share them with us using this link here. So you just have to scan the QR code and then you'll be sent to a link whereby you'll be able to share your thoughts and your feedback, everything with us. And we're most glad to hear from you. So with that, thank you everyone for your time. Thank you everyone. Take care, stay safe, and good night everyone. Hey Max. Okay, you have a question? Okay, so how is the support like after you bought a CI plan through MoneyOwl? Okay, so basically we will continue to support you. It's just like buying an insurance policy outside, whereby our advisor will support you. Additionally, we also have this colleague, basically a client service manager that's also supporting you for any of the administrative matters, like example, change of address, change of payment mode, etc. So we will continue to support you, even for claims as well, we'll be there for you.